Stock markets in Europe are trading lower this morning, with the UK's FTSE 100 index currently down around about 22 points, while the Euro Stoxx 50 index is lower by around about 17 points. The US stock futures market is also trading lower, with the Dow Jones Industrial Average front month's future contract currently down about 80 points. In the FX space, the yen is a little stronger, while the dollar is weaker. When it comes to the commodity space, gold is currently up around about $5, and core government bonds are in demand. German bonds and UK gilts a couple of ticks higher. Good morning, I'm Ishaq Siddiqi, and welcome to your daily market bite. I'm going to give you a quick idea of what's going on in financial markets today. So we had a rebound in European markets on Friday, generally positive session. In Asia overnight, the Monday session, it was weaker, and that's playing onto our European markets this morning. Now, the reason why we are trading on the soft side is because last week, or towards the tail end of last week, what was driving sentiment was the hopes that we may see some resolution to the current budget deadlock in the US, with signs that the most senior Republican, John Boehner, is willing to compromise and negotiate with President Obama in finding a solution. However, over the weekend, Mr. Boehner has been speaking, and he is quite defiant that he's not going to change his mind, that we are still going to see a continuation of this political deadlock in Washington amongst lawmakers, where they find it very difficult to agree on a way to find a fresh budget in order to raise the debt ceiling. Now, we have to remember that the US Congress now has around about 10 days or so before it runs out of money. It's going to have to seek additional financial assistance. It's going to have to borrow more money. And that's very worrying for investors. Investors this morning are digesting these comments and seeing them as in a very negative light, because essentially what it does mean is that if US lawmakers cannot seem to agree on anything up till now, and we are in the second week of the US shutdown, then the shutdown will not only continue for a little longer, hurting economic growth, but at the same time it also means that we are looking at the very possible likelihood of a US default. And that would also mean that rating agencies will be quick to cut the US's credit rating, and at the same time it will also mean that we are going to see a big flight out of US equities, other assets such as the dollar, and that is not something that is needed at a particular time right now, given the fact that the US economic recovery is extremely fragile, and the last thing that we need to factor into our thinking is that we're going to have to contend with a struggling US economic recovery. It does also mean, however, on the other side, that the Federal Reserve are likely to keep a very open, accommodative easing stance, which means that quantitative easing will stick around a little longer, and tapering is not going to take place during the course of 2013. Now, in Europe this morning, looking at the immediate picture, we don't have much on the economic agenda. We have German import prices. That's one of the more notable data points. We also have the Eurozone Sentex indicator. Nothing out from the US. Most US government agencies are still shut down, and federal employees are off from work. And for the moment, at least for Monday's session, we are really looking out for more signs from US lawmakers to quell our minds, to see if we are going to see some sort of negotiations between the Republicans and the Democrats, who are still very divided on a number of issues, and also what we're looking for the rest of the week. So that is all for your daily market bite. Tune in for another one on Thursday, when I'll be back. Cheers.